I'll begin by explaining the periods of the different modules and how they work together so that you can coordinate the different areas in finance. For example, in order to post a goods receipt or an invoice against a purchase order, you'd normally need the MM period and the controlling period open, as well as the finance period. As we saw in section 2, the fiscal year variant dictates the number of periods in a year, when they start and finish, as well as the fiscal year end date. This is not to be confused with the posting period variant, which only controls which periods are open and closed in finance. You can have one posting period variant per company code, or you can include many company codes in one variant. For example, so that head office can close all company codes together in one go, or so that Europe and the US can close their company codes separately. You can also assign separate variants for parallel ledgers if you want to open and close them at different times to the leading ledger. There are 3 places where you can independently control whether a period is open or closed. These are MM, Finance and Controlling. Fixed assets are included in the posting periods and year-end carry forward for finance, but also have an additional transaction to close the fixed asset year. Ideally, during the month, you would have only the current period open, and when all the various closing tasks for a period have been run, the period would then be locked for postings. However, not everything will be completed by the end of the month. Some documents, especially supplier invoices, may not be received on time, and it may be necessary to chase missing information. Usually, in addition to opening the new period, the previous period will be left open for the first few days of the new period in order to post as much as possible relating to the previous periods, reducing the accruals and reporting results more accurately. You might briefly reopen an additional period in finance at any time to make a year-end adjustment. This could be the case for a specific head office or audit adjustments, for example. Unlike other areas, it's technically possible to open and close as many finance periods as you want, whenever you want, particularly in non-productive systems. However, I stress the word technically, as I feel accountants around the world shudder at the thought of allowing postings other than year-end adjustments to closed reporting periods in a live environment. It's possible to repost something that doesn't have an overall effect on the financial reporting, but it's not good practice to make adjustments in previous periods once the reports have been finalised and circulated. You should also consider the impact of late adjustments if you transfer data on a regular basis to an external consolidation or reporting system or data warehouse. If you have to reopen a period, being an accountant myself, I advise to try and make the adjustments at a quiet time or out of hours to minimise the risk that someone accidentally posts something in the wrong period, and make sure that you reclose the period as quickly as possible afterwards. The MM period governs logistics postings such as inbound and outbound deliveries, billing, purchase invoices and material ledger postings. Basically everything outside of finance. Although where material and finance documents are produced during the same transactions, you usually need the equivalent finance and controlling periods open at the same time. The MM periods are slightly different to finance, in that you can only have 3 periods open at a time. The current and previous periods, plus the last period in the previous year, although you can disallow back postings. With MM, it's more complicated to reopen a closed period, and you should look carefully into the implications first, as this may cause inconsistencies if done incorrectly. The app to close the MM period is F4619, close period for product master, which runs the job scheduler, or you can schedule the close to run immediately or at a later time, or you can set up a repeat job for each period. I'll demonstrate the scheduler shortly as it can be used for a number of different tasks. The slide shows the third step of the job scheduler, and for those of you who've worked with SAP in the past, you'll probably recognise the fields of the GUI transaction MMPV. Normally you enter one or more company codes and the new period that you want to open and then click Schedule. If you want to run it in test mode first, you can select the radio button for check period only. Running it in check mode does not lock any materials, so it's quicker than selecting check and close. Although historically, controlling and finance periods were controlled by separate transactions, you can now also control them both in the same app. The app shown in the slide is app F2293 Manage Posting Periods and shows the default view by posting period variant. Although I can also see the periods by company code, where a posting period variant includes more than one company code, I can only change them in the posting period variant view for all companies assigned to that variant. In this example, I've created two posting period variants, OF01, which I use for the leading ledgers of my two company codes, and OF02, which I use for the parallel ledger 2L. Note that as this is a sandbox, I have a number of periods open, which would not normally be the case in a live system. At its simplest, an organisation might just open and close everything in one go. But for larger organisations, they may only want certain areas open in earlier periods. For example, they may want to prevent accounts payable and receivable from posting, but still allow some fixed asset and general ledger month-end postings. The posting period variant allows to open and close different account types independently. There's also an overall code, which is the plus sign. In order, for example, to post a customer invoice in period 10, the plus sign would need to be open for at least period 10, as well as the account type C for customers, and also because the general ledger accounts will be updated as well, the account type S for general ledger. You can go even further and restrict the ranges. Perhaps you want to close your main vendor and customer accounts, but keep the intercompany accounts open for some intercompany adjustments. Or you want to close the fixed assets apart from the assets under construction. In this case, you can create several lines for each account type with different ranges. To change the open periods, once I've selected the lines that I want to change, the Set Posting Periods button will become available at the bottom right. On clicking on Set Posting Periods and then choosing Open Periods, a pop-up screen appears with three tabs: Normal Periods, Adjustment Periods, and CO-related periods. In each tab, I can set the periods for my chosen items. Instead of choosing open periods, I can also schedule the periods to change automatically on a specific date or on a regular basis. In this slide, I've selected the Open Periods button and the CO-related periods. If you're familiar with the GUI transactions, the top part of the screen is the equivalent of the third range in transaction OB52, which controls the cost element type postings. The lower part of the screen is the equivalent of transaction OKP1, which controls the different business transactions in controlling, some examples of which are in the top right of the slide. So, for example, I can close most of the controlling, but just leave universal allocations open. It might also be worth looking at app F4684, which allows to manage just the controlling posting periods by company code, but only if you've set this up to run by company code. There is constant pressure to close each period faster, especially those at the quarter or year end, in order to get the results to the interested parties as soon as possible. This may just mean internal management, but can also mean external shareholders and the stock exchange. At the very least, an organisation should have some sort of checklist to ensure that all the relevant closing tasks are completed on time and in the right order each period. This may be as basic as an Excel spreadsheet, but at the other end of the scale there are far more sophisticated tools. SAP introduced the concept of a closing cockpit quite a long time ago to gain transparency over the closing process, but it has changed significantly over the years. Some versions are available as part of the core license and some require additional licensing. The main thing they have in common is templates which can be configured, for example for a standard period end, a quarter end or a year end. The templates propose a list of tasks to be started and finished at specific times during the closing, and a way of monitoring the status of the close, with varying degrees of automation, workflow or machine learning depending on the version. In addition, they contain the groups of users responsible for carrying out or overseeing the tasks, approvals, due dates, statuses, critical path and so on. The very latest version is the S/4HANA Cloud for Advanced Financial Closing, which although it runs on the cloud can be connected to different systems. Depending on the version, there are different Fiori apps to monitor the close. Some are shown in the slide. I won't go into the detail of the cockpit itself, as there's probably enough there for a tutorial on its own. However, the tasks themselves, whether launched from within the closing cockpit, scheduled, or run manually, essentially behave the same, and I will go through some of these tasks in the next slides. There are various tasks in finance which can be performed at any time during the month, and sometimes daily or weekly. However, incorporating them as part of the closing process ensures they're not forgotten and that the period end reports are as accurate and up to date as possible. The first part of the financial close is ensuring that all the regular tasks that occur during the period have been completed in each area feeding into the general ledger, and that nothing is held or stuck anywhere. The exact tasks will vary for each organisation, but some examples are shown in the slide. Most organisations will need to ensure that all service costs, goods movements, and customer billing for the period has been carried out, as well as all the incoming and outgoing payments recorded. Some supplier invoices may be in transit, but as many as possible of those received should be posted, and then parked and held documents reviewed. If not carried out during the period, then automatic clearing can be run to minimise the open items that need to be reviewed. Other tasks are ensuring that new asset capitalisations and retirements have been posted, as well as payroll and other journals. Where an identical journal is posted each period, you can set it up as a recurring journal and either schedule it or run it manually at the end of each period. Recurring journals were covered in section 5. There will be additional tasks for manufacturing companies, completing the production orders and calculating work in progress, updating standard costs and so on. Internal interfaces should be checked on a regular basis and any outstanding items investigated, such as billing documents not released to accounting. There may also be external interfaces to check and investigate, For example, if you have sales, purchasing or travel expenses coming from other systems. Once all the routine tasks for the period have been completed, then the specific closing tasks can be performed. Some of the key tasks that result in postings to the general ledger are running the fixed asset depreciation, product cost postings, calculation of variances, work in progress, cost estimates, projects and internal order settlements, reallocation of costs, and so on. Some tasks are carried out at every period end, and some adjustments may be done only at a quarter or year end depending on the materiality. Or in the case of accruals, prepayments and provisions, perhaps you do only the key areas periodically but go into more detail at the year end. To go into a bit more detail in those tasks that are directly performed in the ledger that I haven't already covered, I'll start with the revaluation of amounts posted in foreign currencies, then cover the GR, IR, accruals and prepayments, and then indirect taxes. The slide shows the templates available in the Schedule General Ledger Jobs app F1927. Some of them can be run directly or through the scheduler. We've already seen the recurring journal entries template, and I'll demonstrate a few more of them in this section. In addition to holding bank accounts in a foreign currency, other transactions may also be received in a foreign currency, for example, supplier invoices. The trial balance, financial statements, and many other reports can only run in one currency, using the local or company code currency. So when a transaction is posted in a foreign currency, it will also be posted in the local currency using the relevant exchange rate at the time of posting. As exchange rates fluctuate throughout the year, many organisations will carry out a revaluation periodically, as well as at the year end, as required by International Accounting Standard IAS 21 and most local authorities. If the organisation has more than one ledger, and is, for example, reporting local GAAP and IFRS, adjustments may be made in one or both ledgers, and in some cases may be different in each ledger depending on the local regulations. Although exchange rates apply globally, you can set up different exchange rate types for different purposes. See Section 4 for more information on exchange rates. Regulations vary between countries and for different requirements. Group exchange rates may differ from local requirements. For example, some countries require you to use the government-issued or national bank rate, and different countries may have different rules on whether unrealised gains or losses should be posted to the balance sheet or profit and loss, and whether postings must be by line item or summarised and reversed in the following period or not. To incorporate the different requirements, different valuation areas can be defined and assign different valuation methods, accounting principles and exchange rates, which are in turn assigned to different ledgers as required. The slide shows the valuation area IF for IFRS, which in this case is configured for the leading ledger to be revalued on a monthly basis and reversed on the first day of the following period. I could also rerun the programme, either on a monthly or an annual basis, using a valuation area configured for the parallel ledger and local GAAP with a different exchange rate type. Some countries, such as Hungary and Korea, don't allow the revaluation to be reversed at the year end, but instead post a delta amount. The slide shows the selection criteria for the different accounts to be revalued. You can run everything in one go, or it may be that accounts payable and accounts receivable run their respective sub-ledger revaluations once all the invoices and payments have been posted, or the finance team might run everything together, but the revaluation cannot be run before the new exchange rates have been entered, so usually this will be any time after the last day of the period. There are several account ranges that will need to be revalued. The first are the subledger accounts such as suppliers, customers, intercompany, employee, etc. It's not possible to post the revaluation for a vendor or customer to the vendor or customer accounts, so adjustment accounts are used in the same area of the financial statements. The next section in the slide shows open item GL accounts. This might include bank control accounts, accruals, and other GL accounts held in foreign currencies, so the whole revaluation may be done centrally. Or for example, accounts payable may carry out just the accounts payable revaluation. Finally, you also have the GL account balances which are not open item, for example the foreign bank accounts themselves. The Perform Currency Valuation app is based on the GUI transaction FAGL_FCV, which has the same fields as the Fiori app but split by tabs. So the customers and vendors are on the Open Item Subledger tab, and then you have a separate tab for Open Item GL accounts such as the bank clearing, and also for GL account balances such as the main bank accounts. Normally the default is Test Run, and if you want to post the revaluation, you have to deselect Test Run. You can also reset the revaluation with the settings on the first tab. The demo I'm about to show you will cover foreign currency revaluation, but first I want to explain a bit about the job scheduler. Some jobs can be run directly, some are better scheduled, and some can be run either way. There are several apps for scheduling, and they all behave in a similar way. The main difference is the standard templates that they contain. In addition to being able to schedule an app for a later date or time, you can also use the scheduler to set up a recurring task to run on a regular basis, for example overnight or at the end of each period. I'm going to use the Scheduled General Ledger Jobs app, F1927, but there are similar scheduling jobs such as the Scheduled Tax Jobs, Schedule Accounts Payable Jobs, Schedule Accounts Receivable Jobs, and Schedule Asset Accounting Jobs, which are almost identical, but each has different job templates available. The first screen is the standard overview page, which shows all the jobs that have been run for a specific date range, any error logs, and if successful, a results button so you can see what has been processed. To create a new task, after clicking on the Create button, you can choose a job template from the drop-down, which will effectively represent the transaction you want to schedule. Usually the template runs the same transaction that you could run directly, although the layout may sometimes look different. On the pop-up screen for the drop-down, the job template will show the default task, and you can see other templates by clicking on the drop-down and then clearing the existing task from the search field. If you don't clear the search field first, you won't see the other tasks. You can keep the default name or amend it, for example by adding the month and company code. The scheduler in S/4HANA 2020 has 3 steps. In this release they're shown as numbered steps, but the same fields are available in earlier releases without the numbered steps. The first step is the template, where you choose which program you want to schedule. The second step contains the scheduling options, in other words whether you want to run it immediately or at a later date and time, or whether you want to set up a recurring pattern. If you want to create a recurring task, you can define the recurrence pattern by clicking on the Define Recurrence pattern, and then complete the start time, followed by the frequency, and whether this should be measured in minutes, hours, day, week or month, and whether there is any restriction for non-working days. I'll reset the scheduling options as I want it to run straight away. The third step is entering the parameters for the run. If you're familiar with the GUI transaction, FAGL_FC_VAL or FAGL_FCV, you will note that the parameters are the same, but are shown below each other in separate sections rather than in separate tabs. In the General Selection section, I can run the transaction for multiple company codes using the drop-down, assuming they share the same valuation area. The valuation key date determines the date up to which items are included, as well as the reversal date. As mentioned before, I need to select a valuation area to indicate how the revaluation is calculated, and for which ledger and exchange rate type and so on. In the posting section, I can choose whether the run is in test or update mode, and I can also reset the previous revaluation. If I leave the date as determine automatically, it will select the key date as the posting and document date, and the next day for the reversal date, or I can complete the dates manually. You can run the valuation for everything in one run, or, for example, accounts payable can run the valuation for suppliers and accounts receivable for customers, without waiting for other areas to be completed. I'll just choose one vendor now, although obviously you'd normally run it for a range. In the output technical settings, I strongly recommend to choose Save Log, as you can then go back and check the postings at a later date if there's a query, even for test runs. I'll now schedule the revaluation in test mode. It appears in the overview as in progress, so I press Go to refresh it until it shows finished. If it runs successfully, there should be a results button which I can click on to see the report, or an error message if it failed. I can also select the line item to check the parameters and click on the results button there. Looking at the results, you can see that the valuation area has been run for the valuation area IF, which has the leading ledger and method IFRS assigned to it. If I scroll down, we can see how each item is calculated, and this would also apply to customers and general ledger accounts as well. The report shows the local and foreign currency amount for each document, and the old and new exchange rates, with the difference to be posted for each line on the right. Further down we can see the proposed posting and also the reversal of that posting. When revaluing a customer or supplier account, the revaluation is not posted back to the subledger, but to an adjustment account that reports in the same area in the balance sheet. So in this example, the vendor 12300001 is linked to the reconciliation account 21200000, but the adjustment posting is the GL account 21202000 in the balance sheet, and then either 72540000 for a gain, or as in this case, 72040000 for a loss on exchange. I can either print this report by clicking on the print button, but I'm going to export it to PDF by clicking on More, then Document, and then Export as PDF. I can then open it in Adobe Acrobat. Of course, you'd normally have a lot more line items. I just chose a vendor with only a few postings so it would be easier to scroll through. If I need to troubleshoot something, and I can't get all the detail from the logs and spool lists displayed in the job scheduler, I can also go into the Fiori app for the GUI transaction FAGL_FCV to run it direct. You can see the same fields just laid out in tabs. If I complete the general selections and go to the Output Technical Settings tab, I can access the log list. If I select the log I want to display and click on Display Log, I can then see the details of that run. To see the journal, click on the Postings button. And to see any errors, click on the Messages button. You can also drill down to the document line item and also call up the document overview. I will demo the regrouping of accounts payable so that the debit balances are shown under receivables by using the Schedule General Ledger Jobs app F1927. On the first screen, there is the usual overview. I click on the plus button to create a new job and to choose the correct template. In the drop-down, I clear the existing search and select Regroup Receivables and Payables. By default, it is set to start immediately and for a single run. In the parameters, I choose first the company code and then I select the standard sort method for the regrouping, which in this case is called SAP. Next, I choose valuation area. I would choose IF for IFRS, which in this system will update the leading ledger, although I could also choose US for US GAAP, which updates the parallel ledger 2L. I'll enter the balance sheet key date as 30th of September and select K so that it only reposts the debit balances for suppliers. If I left it blank, it would also select the credit balances in accounts receivable, move them to the payables part of the balance sheet. I also select the display and save log boxes. Because I've not selected the Generate Postings box, it's still only a test run. Next, I click on the schedule, and it returns me to the overview, but shows the status of the job as in process. When I click Go, it refreshes and shows the job as finished. There's no error log, but there is a results log which I can select. And it shows first the parameters I have selected, and then the supplier account balances. If I scroll to the bottom, it shows the proposed postings. The first is dated the 30th of September and transfers the debit balances, and the second is dated the 1st of October and reverses the posting. If everything is okay, I can now go back and rerun the transaction in live mode. When I come out of the test run, I have to create a new task. Once again, I clear the existing template and select the Regroup Payables template. I'm choosing company code, sort method, valuation area, and the balance sheet key date. Then I select account type K and also select the Display and Save log boxes. But this time I'll select the box Generate Postings. All looks OK, so I can select Schedule again. Back at the Overview page, I click on Go a couple of times until the status changes to Finished and the Results button appears. This time, when I scroll to the very bottom, you can see I have to go back up a little to see the debits and credits because the details of the documents that were posted now appear at the very bottom. The same app can be used with the same selection criteria to regroup payables for different years, for example invoices due over 1 year or over 5 years, etc. The slide shows the regrouping rerun after an invoice due in 2 years was added. The GRIR account contains two main types of postings. When goods and services are received, the GRIR account is usually credited and the stock or cost account debited. When the supplier invoice is received, the GRIR account is debited, along with any relevant tax accounts, and the supplier account is credited. Any balance on the account will indicate transactions where some or all of the goods have been received without the related invoice. In other cases, may represent invoices that have been received without some or all of the goods. Hence, this account usually has something like GRIR in the name, representing goods received/invoice received. In an ideal world, the balance on this account should only represent short-term timing differences, where at the end of the month the invoice might still be in transit, but is posted a few days later. In reality, it frequently contains all sorts of errors. The most common examples are where the incorrect quantity has either been sent or recorded, or the wrong quantity invoiced or posted. An invoice might also be posted against the wrong purchase order, or even not posted against a purchase order at all. I can't stress enough how important it is to ensure that the GRIR account is kept under control. Especially after a go live, there are usually higher priorities. Often more attention is paid to cash flow, getting payments in from customers, ensuring payments are matched to the correct account to prevent credit blocks, paying vendors who are chasing for payment, and so on. And the GRIR account is often not investigated until the year end, when it comes under the scrutiny of the auditors and is much harder to sort out. Note that this account will never contain pricing differences. If an item is ordered at a price of $50, but the invoice comes in at $60, as long as the quantity matches, the invoice posting will be automatically split so that 50 is posted to the GRIR and the remaining 10 posted to the original stock or cost account, or in some cases price variance account. Usually the invoice will also be blocked for posting depending on the tolerances. It's important to review this account on a regular basis as it can become quite unmanageable. Ideally, any corrections should match the original posting. For example, if a goods receipt was posted incorrectly, ideally the goods receipt should be corrected. In reality, especially where stock is concerned, If too much time has passed, the stock might already have been adjusted by a stock take, or the moving average price might be messed up and difficult to correct. If an invoice has been posted incorrectly but has since been paid, it won't be very easy to reverse it. Once the correct invoice and goods receipt lines have been posted, ideally they should be cleared against each other so that it's easier to identify what's left on the account. Automatic clearing can be scheduled to run on a regular basis, or it can be run ad hoc prior to reviewing the GRIR account. Automatic clearing was covered in Section 5. A useful tool to see quickly the status of the GRIR account is the app F3303, the Goods and Invoice Receipt Reconciliation Monitor, shown in the slide. You can easily see the various surpluses by different criteria and drill down for further details. Another app which you can run directly, or drill down into from the monitor, is the Intelligent Goods and Invoice Receipt Account Reconciliation. You should be able to reconcile this with the GRIR GL account itself if you select matching criteria in both. As the Accounts Payable department will have the biggest insight into the invoice posting, I also covered the GRIR account in my Accounts Payable tutorial, and I'll demo it again shortly. The balance on the GRIR account will usually represent accruals for goods received and not invoiced, but it may also include invoices received without the goods. Particularly if the latter is material, it may be necessary to split the two amounts separately in the balance sheet. The app shown in the slide can automate this. It's based on the GUI transaction F.19 and can be run directly or using the Schedule General Ledger Jobs app F1927. The name of the Fiori app is Repost GRIR Clearing Account, although you need to choose the templates Analyse GRIR Clearing Accounts and Display Acquisition Tax template if you're using the Scheduler app. And that is the heading shown in the app itself, as you can see in the slide. The app actually has two purposes. Where required, you can use this program to split out the GRIR account into goods delivered but not received from goods invoiced but not received. You can also use the same program for countries where the input or acquisition tax on delivered goods can be deducted. In this section I'll explain about the GRIR part. In the slide I've chosen the dates. In the selection screen, as a minimum, you'll need the company code, relevant GRIR clearing accounts, dates and document types. You can also select a date for the reversal posting, but if you don't, it will default to the first day in the following period. If you do not click on Create Postings, the program will run in test mode. Similar to the scheduler for the foreign currency job, you can open the logs and display the results, or if running directly you can see the results displayed on the screen. In both cases, the initial part will show the postings assigned with the transaction type, either BNG or GNB. If we look at the first two transactions, the 900 credit refers to a credit where the debit side would have gone to stock or costs. The 1000 refers to an invoice for the same purchase order. Balance of 100 refers to the fact that a larger quantity has been invoiced and received, hence the assignment BNG. If you were to scroll down further, any items where there was a greater quantity of goods receipted than invoices would have the abbreviation GNB. If you scroll to the bottom, or if running directly there should be the option at the top to jump to postings, you'll see the proposed debits and credits also indicated by BNG or GNB. As you can see in the slide, BNG items are posted to account 2401 450000, which, although the name is not shown, is the account for goods and services not yet delivered, and the items with GMB go to account 2402000, which is named goods and services not yet invoiced. If you're happy with the proposal, you can then go back and post it by selecting the option Create Postings. The tools in this demo are new in SAP S/4HANA and designed to be used with machine learning, but are excellent for reporting as well. However, in this tutorial, as the machine learning requires a separate license, I'll just be showing the basic tools and not the machine learning. The screen shows the goods and invoice receipt reconciliation overview, which is called from the Monitor GRIR Account Reconciliation app F3303. From this app, you can drill down into the goods and invoice receipt account reconciliation, and from there into the individual documents. At the top of the app is a filter bar that can be pinned at the top or hidden as required. If I click on the Adapt Filters button, as you can see, you can add other selection criteria as required. If I click on the little Me button, you can see there's a new option that only appears in some of the overview apps. This option is called Manage Cards. In the pop-up, I can use the slider to hide any cards that I don't want to see. I can also drag and drop the cards to reorganise them how I want. On some of the cards, there's a drop-down, and I can change the information shown on the screen. For example, in the GR amount surplus, I can toggle between company code, supplier, material group, and so on. In this example, I've selected only 2 company codes in the filter, and being a test system, there are only a few suppliers and documents, and the numbers are quite low. Some cards just show information, and some allow you to drill down further. Note that if I click on the card as a whole, the drill down will show all the items, but in some cases, for example, if I just want to see the 2 items in orange in the GRIR reconciliation processing, I can just click on the orange part of the chart to see just those items. Although on the card, the colour coding refers to company codes, it indicates different things in the drill down, by the way. If I drill down from the overview, the result will be filtered by whichever card I've drilled down from. For example, in this case, those items which have a good receipt surplus. If I want to see everything, I can go directly into the app, which is called Reconcile GRIR Accounts. I'm just going to add company code OF02 and change the time period to the whole year so that it shows similar data to the overview. The reconciliation screen is split into 3 parts. The first part is the filter bar, which can be shown as both a normal filter bar and as a chart. In normal form, the Adapt Filter button behaves as before and I can add fields. I'm going to change the filter to chart format. As you can see, a number of charts are shown in the filter. If I click on the Adapt Filters button while in chart format, the options are in chart form, and I can add and remove the mini filter charts. I'm just going to reset that back again quickly. In some cases, clicking on a specific item will display it in the chart and the table below. For example, clicking on the purchase order 4500003945. Clicking a second time resets it back to what it was previously. I will reset the filter bar back to normal to give me more space and expand the middle section, which is the chart. Currently the view is by company code and shows normal items and statuses. If I go to Settings and deselect Status, and instead choose Material Group and Series, for example, you can see that the material group is shown in the chart instead of the status. The company code is along the bottom axis and the series is inside the column chart. Or I could change the material group to category instead of series. You can see the path in the top left. If I go back to Settings and set the material group back to series, and add a count assignment, you can see the bottom axis now has 2 levels, and the path at the top left increases. I can move up the path and get rid of a count assignment by clicking on the item above it, the material group. I go back to Settings and add the supplier in the series. The lower part of the axle is the top of the hierarchy, i.e. the company code, and the company code is top in the menu path. If I go back and change the order using the arrows, the menu path now has supplier at the top and the supplier is in the lower part of the axis. With so few suppliers and company codes, it doesn't make much of a difference, but you can see how it should work. The series shows in the columns as colour-coded, or I could change to bar chart, pie chart, or any number of other charts. I can also use the View By button to change the menu path on the left, for example by adding a count assignment category. I can take the account assignment category out again by clicking on the blue item in the path that I want to go back to. Going back to the normal screen, if I click anywhere in the chart, it will filter those items below in the table. And you can also click on the Details button to see more and drill down, for example, to the supplier fact sheet to see the supplier master data and transactions. I'm now going to look at the table. I could click on the blue items to jump to other apps. I can either make the table full screen or I can switch to just table view instead of both table and chart. With the table I can drag and drop columns and increase the width easily. I can click on a heading to sort, filter and group. Here I can also freeze, for example, the first column, the purchasing document, so that it stays even when I scroll to the right. If I click on the blue purchase order number, I can drill into the purchase order line item using the Manage Purchase Order app. But the most effective way to analyse the transactions is to click on the arrow to the right of the line item. The new screen is split in two. I'm going to make the right hand side full screen and zoom in a bit. We can see that the invoice amount is larger than the goods receipt amount. The invoice quantity is larger than the goods receipt quantity, both of which are due to the fact that there's no goods receipt posted. As we scroll down through the amounts, quantities and purchase order history, you can clearly see this everywhere. And in the financial accounting items, I could drill down the goods receipt document to see the financial postings. And in the purchase order history, I can drill down to the original posting in the material document. If I go back to the reconciliation and search in the Smart Facts box for the goods receipt amount surplus and choose one of the purchase orders, for example 4500003884, you can see that no invoice has been posted. If we look at 4500003911, which we can see has some invoices and goods receipts, the result is more interesting, and we can scroll down and look at all the things that have happened. We can also see the timeline. In each section there's a settings button where we can add more items, sort, filter and group. I will now find and display purchase order 45003958, which is the one where we wrote off the difference using the MR11 transaction. As you can see, everything is now green, meaning it all matches and no smart facts show a surplus of either invoice or good receipt. Scrolling down, we can see from the financial accounting open items and the purchase order history that everything balances neatly to zero, although you will note that the account maintenance document for the write-off does not always show a value. Instead of using MR11, I could also have performed a write-off using this app. If I go back to the main screen and remove the filter for the last purchase order, and select a new purchase order, I can click on Process Item and assign various different tasks, assuming the appropriate workflow is set up. This is where machine learning would come in, as the machine would learn the tasks to propose. Normally you would assign someone to check everything first before performing a write-off. But assuming everything has been checked, I can select purchase order 45003643 and then select perform write-off. This creates an account maintenance document similar to before. If I now drill down into the same purchase order, you can see the details. Of course, there are a lot more columns that you can add in settings. You can also directly call up contact details from the supplier by clicking on the supplier number.